Hey traders. Alrighty. So I want to come on to do a live stream for you today, getting you ready for the week moving forward. And I want to give you guys some things to really help you out when it comes to your progress and how you're going to approach this week moving forward. So that's what this live stream is all about right now. The first thing that I want to say is that I want to really encourage you. Okay, I want to really encourage you to be focusing on the patterns. Okay, there is fundamental news and there is a technical patterns. Okay, and technical patterns, fundamental news right now is not really going to help you out. P ratios, companies not making profits, all those sort of things that you think is going to affect the price right now is not going to affect the price right now. It's just we cannot rely on that, especially if you're a trader. Okay, so the thing that I want to say is that if you're a trader, okay, and you're trading the markets, I mean you're in and out, you're active. And if you're active in the markets, okay, if you're active in the markets, then please don't rely on fundamental long-term patterns. If you're an intraday short-term, if you're a short-term trader, I mean you're going to be in and out within a few days, maybe a few weeks, then don't be listening or taking positions based on a long-term macro view. That's like saying gold's going to go up over the next 2 years, but you're going to be in it for 2 days. You know what I mean? Like there's a incongruency there with the way that you were trading the markets there. So have your approach same with the way that you trade the markets. Okay. So once again, the first thing I must say, guys, is that if you're approaching this market, if you're a trader, you're an active trader, means you're getting in, getting out. Like I am. I'm an active trader. I also am a long-term investor. A trader and an investor are two different things. Make sure you are separating them. An investor is buying something and holding it for at least a couple of year view, and he's going to get the swings in the prices. That's an investor. A trader is looking for certain time to get in and get out of the price action. If you're an investor, yes, look at what's likely to happen over the next 2 to 5 years, and then take that approach and just be patient with those positions. Don't be jumping in and jumping out. Understanding what you're doing there. You're getting in for a longer term view with a bull market. But then when it comes to the way you're trading the markets, okay, the way that you are trading these markets, all I say is just rely on the patterns, okay? The patterns. Whatever, and that's what I want to say to you right now is like, what pattern have you noticed? What pattern have you seen on the charts that you say, you know what, there's actually something to that pattern? And maybe it's one of the trading systems that you learned from me. Maybe it's one of the webinars you saw from me, or maybe it's one of the trading systems in the Master Trader Lab or the trading course itself, you know, or even the free trading course I'm giving away right now. If you go to johnsfreegift.com, you'll be able to get the free trading course, and I give away I think 2 trading systems in there to get you going. Right, it's free. But what patterns? That's what it all comes down to. Okay, there are patterns in the markets that produce a very high probability of doing well in the markets, and there are patterns that don't. And that the one thing that it's important to do is for you to identify what patterns that you see that work really well. Not 100% of the time, because nothing is 100% of the time. So the first step is understanding trading and investing are different. So don't confuse those. If you're approaching the markets with a investing research and you're trading short term with an investing view, it's so incongruent there. Don't be incongruent in the way you're trading the markets. Don't. Okay? Trading is all about understanding technical analysis and short-term trading patterns that produce a high probability of it moving in that direction. Investing is long-term. Second thing is, that's the first thing. Second thing is, what is the pattern? What is the pattern you're looking for? What is the setup? You know, like if I show you these here, right? This here is just different, like screenshots after screenshots after screenshots. Let me actually see if I can I do this? Oh, well, anyway, you can see how I've got literally dozens and dozens and dozens of screenshots of different patterns that I look for different patterns that I look for in the market. And here is one pattern that I look for. I'll give it to you right now. All right, so let me see if I can do this. I'll give it to you right now. Here's the pattern. All right, I'm just going to give it to you right now. Here's the pattern. Can you guys see this? Or is this backwards for you? Let's have a look at this here. It's backwards. How do I remove? Right, chat. Oh. All right. So I think, okay, cool. Might be backward, mate. Yeah. Love it. All right. It's Monday morning right now, guys. It's actually almost 6 o'clock in the morning. I've just finished looking at my goals. I've spent the weekend looking at where I'm going this year, what I'm doing, and I'm excited. Can't see anything. Yeah, me neither. I can't see anything either. I think I need my glasses. I think the wireless mouse is running out of its battery as well too. So anyway, there's something running out over here, I tell you. So can I do this? Let me see if there's can I do this? Which side is this side? This side here. Is that which side is it? This side here. This side here. Is it that side there? I don't know. All right. Well, what we're looking for is this. All right. Just put it that way. Right. Think opposites. Think opposites. Right. Like you should be in the markets. Right. Think opposites. When everyone's fearful, be greedy. When everyone's greedy, be fearful. This is the time to think opposites as well. Right. So, I'm having a good old time here. About to go kick my ass in the gym as well too, guys. Looking forward to that. Now, what am I looking for? So I am selling or buying on that chart. Both, buy and sell. That way you'll never be right, you'll never be wrong. Oh, it's gonna be an amazing week, guys. Anyway, so what I'm looking for, just picture this. What I'm thinking about, what I'm looking at is this, guys. Okay, is here's a 52 moving average, right? 52 moving average. Where are you here? Right, 52 moving average. I'm looking for the 52 moving average, and then I'm looking for a period of it to be above the 52 moving average, for it to go sideways for a few weeks, and then a breakaway bar. Breakaway bar. All right, just picture this. That's the breakaway bar there. And that's what the pattern looked like. Sideways, breakaway bar, above the 52. Here was the sideways. That breakaway bar there is that breakaway bar there. Look at it here. 1, 2, 3, 4 days later, or at least maybe a couple of days later, you're in and out with the short-term trade. That's the pattern. That's the pattern. People are like, John, what should I do in the markets right now? Go long and go short. You won't be wrong, you won't be right. It'll be neutral. Right? And so these patterns, guys, these patterns work so well. Let me see if I... The pattern I just gave you guys works so well. Look at this here. Is this backwards? It is backwards. All right, here's another trade that I did just a while ago, actually. Look at this here. Look at the patterns. 52 trending up. Sideways. Breakaway bar. See the breakaway bar? 52 trending up. Above the 52. Market runs up. Sideways. Breakaway. Uptrend. Sideways. Breakaway bar. Up for a few days. In and out. You won't capture the whole move. You might be in it for maybe 2 or 3 days. In and out. There you go. That's the pattern, right? Short-term trading. Short-term profits. And by the way, guys, when it comes to a short-term move like that, you're looking at somewhere between 50 and 100% return with an option. So you got 5, 10 grand on those trades, guys. It doesn't take you too many trades like that per month for you to say, oh, in that 2 days. That's what I'm saying about trading. Now, I have investing trades. Right, guys, I have investing trades where I'm long, right? Right now, I'm investing right now in silver, which means I am going to endure the swings, the pullbacks, the runs, the dips, the highs, the lows, the extensions, the big crashes, all that sort of stuff. I understand that. That's my approach. I let that go. But when it comes to my trading, right? When it comes to my trading, I'll give you another example. Here's another trade, right? Screenshot after screenshot. Here's another trade, guys. Look, where are we? Here. Look, 52 trending up. Market in an upward trend, upward trend, upward trend. Oh, look, sideways, sideways, sideways. Oh, this is the 20 moving average, by the way, guys. You want to know what that is? 20 moving average trending up, 52 trending up. Market stepping higher. Oh, look, 2 to 4 weeks, sideways, not much going on. Oh, breakaway bar, what's that? Oh, breakaway bar. 20 trend, 52 trending up, 20 trending up, sideways period for the markets. Breakaway bar. Oh, what is that? Oh, nice breakaway candle. Oh, look at that. 1, 2, 3, maybe 3 days later, out there. Maybe 30% profit, maybe 40% profit with the option. Done. Done. That's how easy trading can be, guys. And guess what? Yes, you do have your losses. But I just gave you guys a very simple but powerful trading system if you understand the concept. Right? You know, here's what was this one last year? Here's another different type of example, right? Look at this here. Market trending down, bit of a pullback, nice breakaway bar, 52 trending down. Market's actually stepping down. I know it's backwards for you guys, but think opposite. All right? Market's trending down, pullback with the 52 trending down. Really nice pullback, real nice breakaway bar, and a bit of a run. Right, guys, so take screenshot. And not only this, guys, but, you know, when it comes to like, and I've got dozens and dozens and dozens of trades like this, guys. Like, look at this trade. This was a futures trade that I took a while ago, actually. When was this? Probably start of the year. Look at this here. Good evening. Look at this here. Look. Where are we? Here we go. Look. 52 flat, not much going on. Bit of a pullback. Small bars, not much going on. Breakaway bar, way it runs. So, and I do this for my actual private clients as well too. For my private clients, they get these three suckers. What are these three suckers? These are the trades. Firstly, they get the manual for the highest probability trading system on the planet, which walks them through step by step exactly what the highest probability trading setup is. And then I give them two these are basically examples after examples of different trades that have happened, or different types of trades that have happened. And the same for this one as well too. You can see how I lay out the different trades. So it's the same pattern, it's the same type of setup, but example after example to get my private clients on the path of achieving success in the markets. And so not only do I have all of these examples, but I've got a folder right now, guys, about, I don't know, probably 50 to 100 different other screenshots, guys. So it comes down to the patterns, right, guys? It comes down to the patterns. It's not the election that's going to affect the short-term price movement, right? It's not, it's like, it's all about the patterns. The pattern, right? The pattern. And so that's what you want to do. Right, you want to focus on the patterns, and the patterns is going to give you the best probability of doing well in the markets. Not if you think, oh well, Trump's going to win and the market's going to crash, so I'm going to short the market now. Wrong, big F for you. So that's what you want to be. That's what you want to be doing, guys. Okay, you really want to be focusing on the patterns. See, a lot of people, they get into a stock or they get into something because they just, Boeing is not going to go out of business, so I'm going to go buy Boeing. And then you're in, and then you're out and then a week later you're freaking out, you're getting out. No, don't do that. Don't do that. Incongruency. That's what's causing you a lot of friction with your trading, is so incongruency. A long-term macro view or a fundamental view with a short-term trading approach is never going to eke you out a nice profit. Never. It's like saying, oh well, gold's going to be at $5,000 in 2 years, so I'm gonna buy it now, and it dips for a week, and you're like, oh my goodness, I thought it was going to go up. Oh no! Oh no! It's like, don't do that, right? Don't do that. That's so incongruent with your trading. You are creating so much friction. So much friction. If you think gold's going to be at $5,000 by 2025, well, buy gold and it's going to dip 5-10%, and then it's going to rip 10%, and it's going to go through bull markets, and it's going to go through sideways periods and pullbacks and all that sort of stuff on its way to 5,000, if that's what you believe. And it's going to take time. But if your approach is short-term trading for cash flow, like I showed you with the pattern, right? The pattern. Am I saying that right? The pattern. And pattern. What am I saying pattern for? With the pattern. The pattern. Right? Then just focus on the pattern, because the pattern is going to give you a really high pattern. Pattern. Have you ever said a word so many times that it sounds weird to you now? You say, take a normal English word and you say it so many times, it's like... I was at the shopping center the other day, and I was talking to one of the workers, a young kid, and I was saying similar, and I asked the two ladies, and they go, I said, how do you say similar? I was like, is it like simulator, similar? It was just, anyway, so, yeah, guys, so, always, and see, I got folders and folders and folders of workbooks that I always continue to work hard on myself, guys, because I am a trader first and foremost. Second, a coach. And then thirdly, I kick my ass in the gym to get into shape, and best dad in the world. So that's what I want to say, guys. That's what I want to say. And then on top of all that, what is your pattern? And then say, you know what? This pattern has a 70% win-loss ratio or an 80% win-loss ratio. This one actually could be a losing trade. So I'm going to take this trade, but I know that most of them are going to make a profit. I don't know if it's going to be this one. And I'm just going to take the trade. And I promise you guys, you take the same pattern 10 times with a 70% win-loss ratio, you're going to do well in the market, right? It doesn't take a genius to do that. It takes discipline to be patient and waiting for those setups. So you might not get any of those patterns that you look for in the markets this week. That's okay. That's okay, right? Just be patient. Be patient. No FOMO. Right? And that's what it's all about. It's never about being right or wrong with the markets. It's like, you got this right, I got this wrong. No, just focus on the patterns. What pattern are you looking for? That's the main thing, right? It's like, if you are not focusing on a pattern, you are going to lose all your money. John, need early coffee. Yeah. Well, I'm about to take a caffeine hit before I go kick my ass at an F45 session. That's this morning. So right now, so 6 o'clock in the morning, I had an F45 session early this morning. And then midday, I have a weight session. So I'm going to be doing a weight session midday. And then later on tonight, if I can, I'm going to be booking into doing a 45-minute, about around 30 minutes to 45 minutes. I think it's a 45-minute class, spin bike class. So I've got a busy day for myself. A big day. I'm always trying to, as you can see, guys, I'm always working hard on every area of my life, especially when it comes to my health and my fitness, training, and all that sort of down home country goodness. So, All I want to know is when to move into 401k into stable value fund. There is no right or wrong answer to that. The right or wrong answer to that is really just focus on learning how to trade yourself and do it yourself. That's all I say. But that takes a while though. When Great Depression, John? When Great Depression? We've already started it, don't you know? When Great Depression. Good morning from Singapore. Singapore. I want to go there. I've always had that on my bucket list. I've always wanted to go to Singapore. I don't know why, but my heart's saying, go. It's like, go, Singapore. It's always said that to me. I don't know why. I've always said this, Singapore. So I don't know. Hopefully I can travel next year. And I'll go to Singapore. What happens with me is I make a couple of long-term investments that turn into short-term trades because they go up around 30 to 40% profits. So I just say screw it and bank them. Yeah. Now I wouldn't say that's a bad thing, Joel. I wouldn't say that's a bad thing. What I'll say is, even with a long-term trade, have an area where you're likely to get out as well too. You know what I mean? Like you say, okay, once it gets to these areas, a long-term trade for me says, okay, once I get to this sort of number that I believe we're going to get to, then I'm gonna take it out. John, gotta be one of the coolest guys on the planet. Oh, thank you. I just love what I do. When you make good money from what you do, guys, you love it. Going on 15 years of this guy. But when I first started, guys, $250,000 lost, almost went bankrupt. Everything really, really bad. Boeing is up. Any move sideways for a while longer, though. The trend is your friend until it's broken. Yes. What do we got here? Got to conquer your fear first, though. Yeah. Well, that's what comes into trading, right? It's like fear of having a loss. That's the very first thing that you're going to have to overcome is having a loss, because you're going to have a loss. If you can't accept having a loss, then don't trade the markets, because that's the name of the game, right? It's a probability game. See, I don't see a lot of people. They will trade the market. They'll go gamble, but they won't trade the stock market. It's like, why would I trade the stock market for? So it's all about the patterns, right? And just focus on that, and then have good risk management, guys. Don't try to be right or wrong with the markets. Just focus on doing really, really, really well, and focus on you being a good trader, which simply means you're gonna trade one pattern for the whole week. That's all. That's you being a good trader, right? And when you see the pattern turn up, you say, you know what? Here's the setup. Is it gonna be a profit? Is it gonna be a loss? Is it gonna be 30? Is it gonna be in the 30%? Is it gonna be in the 70% of win-loss ratio, or is it gonna be in the 30% loss ratio? I don't know. But I do know if I take this same setup 10 times in a row, I'm going to make money. Okay. And sprinkled in between those 10 times, I'm gonna have maybe 2 or 3 losses. Okay, let's just keep doing that. You know what I mean? Like that's the way that it works. And then if you look at it, say you take 10 trades, you're like, oh look, I had 2 losses, 8 profits. Half the profits were just maybe small profits. And then I had, maybe 10, 20 of those profits made really big profits. Nice. Rinse, recycle, repeat, right? That's the way it is. And then over the year you make money. That's the name of the game. But where do we go wrong? Oh, look, shiny object over here. What's this thing over here? Right, little shiny object. So, with that being said, guys, I am going to finish up and start getting ready for my kicking ass session. I hope today has served you well, guys. Again, if you need my help at all, then just go to johnsfreegift.com, grab the free trading course. But just to repeat, guys, johnsfreegift.com for the trading course. But just to repeat, the 3 things that you must be doing right now to focus and getting ahead and having an amazing week. And that is, number 1, don't mix up trading and investing approaches. An investing approach is long-term. Investing approach is long-term. If you're doing investing long-term macro analysis and research on, say, gold or silver or different companies, then you're having a longer-term view, and those things take time to get out. If you're trading the markets, focus on the patterns, the technical analysis, right? Because that's the only thing that's going to give you a probability of a short-term move. Big macro trends, they're going to happen. Short-term moves, trading. The second thing is what pattern you're looking for. What pattern are you looking for? Do you even have a pattern? Is it what I talked about today? Is it something else? Is it divergence? Is it whatever it is for you? What is that? And thirdly, just focus on that one pattern with a good risk management and say, you know what? I know that this trade could be a loss. So if I'm going to position myself to say, okay, if it is a loss, I'm going to protect myself. And it's going to be a small loss on the account. And if it's a nice profit, which most of them will be, then I'm gonna do that. And I'm not gonna be I'm not gonna be scared of losing money because I'm protecting my account when I'm putting on this trade. You do that, guys. Number one, have a trading approach. Number two, have a pattern you're focusing on. Number three, not being right. So you know what? I'm just gonna focus on taking the same setup 10 times in a row. And I know that this is going to produce a really nice profit. Now, whatever that pattern is for you guys, you've got to figure out that. As I said before, that the pattern that I talked about in today's session will probably give you a 70% win-loss ratio. 30% of the time with an in-the-money option will probably give you a 20 to 30% loss. And 70% of the time, you'll probably get it between a 50 and 100% profit. Rinse, recycle, repeat throughout the whole year. One pattern, do well, kick ass, take names, mwah, and kiss babies. All right, guys. Have an amazing week. I'll probably do like a bit of a charting analysis a bit later on. What's going on in the markets right now, but on a technical basis. But I'll probably do that a bit later on. But I thought I want to come on right now, first thing in the morning, or for you guys, Sunday evening, to getting ready for an amazing week ahead, guys. Again, guys, go to johnsfreegift.com to grab the free trading if you need my help at all, or if you're stuck with that. But if you don't, guys, just go to the playlist, the trading and education playlist on the YouTube channel, and that'll also help you out as well too. All right, guys, talk to you soon.